All right. Well, hello and welcome everyone. Doug here with the LincolnList.com. Today I want to spend a few minutes with you talking to you about this market. And most notably, we're going to talk about the Qs, because where we sit right now is at a very critical level. And what happens Friday, probably when you're watching this, will tell us exactly what we're supposed to expect or what we can expect coming through the earlier parts of October, because we are at some serious critical levels. Otherwise, I wouldn't waste my time doing this video with you. We would just keep buying stocks in bullish markets, but we got some problems. Also on that note, I want you to take a look at the video after this one, or when you get a chance if you haven't seen it. Just a couple of days ago, I did this video about why I thought this market was going to trade lower, and the tempo. The way this market traded on Thursday just reinforced what we saw. And just some quick tidbits from that, guys. We talked about how market tempo gives you these clues. It's not a secret. It's like market corrections don't sneak up on you. You know, they happen at certain times and you start to see a change in tempo. And that was market could no longer hold gap ups. Market couldn't rally on the Fed. Market couldn't rally on anything. It was just like nobody was interested in buying or putting money to work at these levels. And they still haven't found a level that they're willing to step in and start putting money to work. And we're going to talk about these. So let's take a look here at the Qs. Again, if you haven't seen that video, make sure you watch it after this one. I want to talk about this because this is a very, very important level that we're going to be talking about here in these Qs. And that is just a couple of days ago. I'm going to pull up the NQ futures. It's a little easier for me, but if you want to look at the Qs, just follow with what I've got going on here. It's going to be the same chart. But this 10,600 was the low from just a couple of days ago. It's like 10,650 was the low. And we saw a pretty aggressive rally off that. We had a really nice strong wick. Then it followed up the second day with a little bit more bullish activity. Now, this was one of those sucker moves where it's kind of drawing people into thinking, okay, that's the bottom. That's support. That's where this thing's going to rally. We're going to go back to the highs. And, well, here we go. Everybody steamrolled on Thursday. And again, that tempo change. And we saw that just a week back or so, a couple of days here, pressing upward into the moving averages, kisses support slightly, then another aggressive wipeout. So it's not done with these aggressive wipeouts. The more important thing is we've got to pay attention to this level. Either, and probably on Friday, we're going to get our answer to this. Either these Qs hold this 10,600 and we build there and begin to make maybe a rally on Friday, for example, or going into Monday and Tuesday, we have a shorter term rally. And then based off of that rally, we can decide as to whether this is something that's going to last for a longer period of time, or it's just another sucker's rally. That, again, remains to be seen, and if and when that even happens. But that's going to tell us whether or not we hold that number and the market is making a short-term bottom, because this is a big deal. And this was also support that's going back to parts of August when we were struggling to make this last leg of a breakout. Right before this big run, the market was solidifying that 10,600 as a benchmark and a base before it made this monstrous uprun. So with this 10,600 has to hold. This is not a secret here. It's not an illusion. We're not doing some kind of, secrets under the table here. It's right in front of your freaking face. It either does it or it does not. I mean, that's the beauty of the market. It's just pure as hell. You're either going to hold 10.6 or you're not going to hold 10.6. Now, if we do that, we could probably expect the beginning parts of the week are going to be bullish. We'll have some bullish opportunities. We could position ourselves that way. If this doesn't hold, there's going to be some serious bloodbathing going on. That serious, showering that stuff. It's going to be coming out like a big faucet, a rainstorm on your head, because there's nothing in this till we get till about 2030. Now, when I say nothing in this, what I mean is no support. There's no legit support. The market's going to have to find another level of support or create one, or 10.3. And I think if my math is right, that's 15%, right? That's like 15% correction. That's pretty deep. That's pretty deep. Now I put this 99.50 area down here. Let's just say 10,000. This low from June. That's going to be 20. I think it's 20% correction right there. I didn't expect 20% when we took off, but hey, the thing about these corrections, as you're learning, or I'm sure many of you have traded through these. They're so damn fast. That's the thing. I mean, look what happened here in the Qs is that practically an entire month's worth of bullish complacency got cleaned out in 3 days. You know, I mean, the first 3 days of this was like taking people to the woodshed. It was just mass selling. So the market hasn't been able to bounce or rally or build off of that level. And the thing is, with such a violent, vicious rally after the coronavirus correction, you got a long way to go. There's some air underneath these charts, and that's what we really have to be concerned about. If the next big level of support was just a couple points away, we could start positioning ourselves for that now. But some of these are like another 1,000 points below. I mean, this is nasty, and it certainly can get way, way worse here before it gets better. So what we're talking about in terms of a correction could be another 7-8 percentage points, and at these levels and at these numbers, dang, dudes, that's high. So that's the Qs. Now, I want to just take a quick peek at the SPY because you're going to find the same kind of tempo here in all of the market instruments. I mean, the SPY is sitting right here too at 321s, I would say. And that's also, again, July. That's a July support. So you'd see we've cleaned out August. Whatever was August, if you didn't take any money off the table in your positions in August, you're most likely underwater. And that's what sucks about this shit, isn't it? Because look, guys, I'm not judging. I know. What do you think I'm doing this for? I've done this. I go through this. I'm a trader for a living. I know what it's like to sit here and have a great month and then spooze it all out down the toilet by being ignorant, you know, not paying attention. And that's kind of what you figure out after a while of trading. You're not really just trading for gains all the time. You're trying to avoid getting smoked, getting barbecued, getting roasted. Because who wants to live this way? I mean, how many times do you want to sit here and make bank and then give it back? And then rework your way back up and make more money again? And then give it back and keep giving it back and keep giving it back. Jesus, what are you asking of yourselves? What are we asking, right? That's what makes you go crazy and throw computers out the window and stuff. Anyway, pay attention to these. These are big, and probably when you watch this video, the answer will be there. Friday will probably give us the answer, and that's all we need to know. I'm not going to sit here and tell you that the market's going to go lower or the market's going to go higher. I'll figure that out. But I know that this level is important. If we hold that level, I'm willing to position myself slightly long for the next couple of days and take advantage of a short-term rally. Depending on that rally, then that may change the way I hold or how aggressive I decide to become. If we don't, I don't want to have jack shit to do with longs right now. You know, maybe I'm wrong, but I'm not going to step in front of this and look like a tool. You know, not me. You can. I'm not. That just ain't how I'm going to roll here, because I'm not into giving money back right now. I'm not looking for stylish points. I don't need ego points. I want to keep my money so when I have clear signals, I can bank. That's what I want to do. Or I want to position myself a little bit short. Anyway, guys, please protect yourself real quickly. Remember, when you're trading through corrections and volatile markets, first starts with lower position size, being more discriminate and particular about the trades that you take. You know, if you don't have something, don't take it. If you need to sit on your hands, just sit on your hands for a day or so. It ain't no big deal. You know, trade wisely and use stops. No excuses for these bastards right now. You may have loved them on the way up, but they will take you to the woodshed on the way down. Do not let these bastards take your money, okay? Anyway, you need help trading, you know where I'm at, thelincolnlist.com. You'll find me there if you need some help. Please trade well, guys. Trade safe. Be patient here. If you need help, just reach out to me. Support at thelincolnlist.com with your concerns, questions, quarrels, or curmudgeons, or whatever you got on your mind. Until the next video, take care, guys. Trade well.